So Tesla is a leading trending this morning. The pre-market ticker on Yahoo Finance showed shares rising slightly, or roughly 0.7%. The increase followed the company's fourth quarter delivery figures exceeding analysts' projections. Prost Huber is still with us, joining us at the table. Prost, there were a lot of doubts about whether or not Tesla would meet its annual and fourth quarter goals, and it appears that this was sufficient to get it there. However, at this point, the numbers are just barely crossing. Delivery-wise, 484,000 for the quarter exceeded estimates of 483,000 compiled by Bloomberg. Production-wise, 49,000, 400 almost 495,000 vehicles compared to 482. So, a big beat there. They made a lot of Model 3s and Model Ys during the quarter. They don't break out regionally, so you know where they're made, but definitely more in China, the US, and Vermont as well. For comment, and context, here you know that 1.81 million cars globally for the year, which is 38% higher than year ago. Not a little bit below that 50% compounded growth, which we knew they were not going to hit because of factory shutdowns and tweakings. No one is really making EVs like they are from the bustling streets of China. Join us as we explore the mysteries behind Tesla's recent performance on a worldwide scale. Will the Model Y continue to captivate the market, or will the Model 3 take center stage? What secret do the most recent analyst insights hold for Tesla's future? Whispers and projections spark a whirlwind of speculation. Put on your seatbelts and get ready for an exciting ride into the heart of Tesla's universe, where every bend offers fresh revelations and insights. Sparks unlimited possibilities, but make sure you hit that like before moving on. And the subscribe button, this is where curiosity meets Tesla stock news. The leading edge lets begin our thrilling examination of Tesla's dynamic history now. With interest rates seemingly peaking in anticipation of 3 rate cuts in 2024, this week has been productive for Tesla and the stock market as a whole. The stock market has already responded favorably to this segment, where we also discuss some interesting data from China and Europe, as well as some concerns. We'll also talk about some interesting findings from 2 analyst notes we received this week. Moving forward, we'll focus on the Optimus version 2, which is an intriguing development to watch out for in 2024. According to a recent update, there are already 15 T400 units of Tesla insured in China. This figure represents a significant growth trajectory for Tesla in the Chinese market, with a 7% increase compared to the previous quarter and an impressive 34% rise year over year. These numbers are particularly noteworthy given the competitive and rapidly evolving automotive market in China, especially in the electric vehicle sector. However, it's important to note a slight dip from the previous week's numbers. Despite this minor decrease, Tesla is still on course to achieve a record-breaking quarter in terms of sales in China. This sustained growth, even with weak toe fluctuations, underscores the strong demand for Tesla's vehicles in the Chinese market. A closer look at the data reveals that the decrease in weekly numbers is primarily due to a drop in Model Y deliveries. The Model Y, Tesla's compact electric SUV, has been a popular choice among consumers, but such fluctuations are common in the automotive industry and can be influenced by various factors, such as production adjustments, market demand, and supply chain dynamics. On the other hand, the Model 3 overall growth in Tesla's insured numbers in China is a positive indicator of the company's expanding footprint in one of the largest electric vehicle markets in the world. This expansion is supported by Tesla's efforts to increase production capacity, enhance its supply chain, and adapt to local market preferences. The Model 3's consistent performance indices its strong market position and continued appeal to consumers. This steadiness is crucial for Tesla, as the Model 3 is often considered an entry point for consumers into the Tesla brand and electric vehicles in general. Furthermore, Tesla's expansion in China is noteworthy for the company's worldwide sales statistics, as well as for the growing acceptability and appeal of EVs in China. The Chinese government's promotion of greener transport options, which includes infrastructure assistance and subsidies for EVs, is encouraging this development. The data also reveals Tesla's market share in various European countries, with notable figures from Iceland. Tesla's analysis suggests a new production record for Giga Shanghai in Q4 with a notable increase in the Model I to Model 3 ratio with the Model 3 refresh. We might witness a resurgence in its demand. Norway, Ireland, and Denmark, but the circumstances in Germany, home of Giga, a vital market for Tesla Berlin, is a difficult place. Germany's sales numbers for the year have not performed as well as anticipated, despite rises seen in other nations with potential rates of let's jump right into the solar energy industry, where businesses like Nace Energy and SolarEdge are making waves impressively quickly. Cuts in the United States and potentially Europe could lead to an increase in demand for automobiles and solar installations. The price of Energy's shares has surged, rising from around $777.80 to about $120. This increase is indicative of the stock market's forward-thinking attitude, which anticipates possible rate cuts, causing us to concentrate on the analyst environment. Ronald raised Tesla's price target from 125 to 130, but he is still cautious about the stock. This move is significant because it represents a nuanced assessment of Tesla's potential future performance in the market. Ronald is ranked 6,597 out of 8,636 Wall Street analysts by Tip Rankings, a platform that rates financial experts based on their performance. He is not among the top-ranked analysts, but it is important to take his standing and track record as an analyst into consideration. Ronald's 7.2% average return per company recommendation is a decent number in the intricate and erratic realm of stock market forecasting. This average return is a whole indicator of how profitable and accurate his prior stock suggestions were. Giving a background against which to assess his Tesla analysis, Ronald's circumspect attitude, in spite of the cost, the target upgrade, implies a conviction in Tesla's development potential, tempered by knowledge of the difficulties and uncertainties the firm faces. This could be because of a number of variables influencing Tesla's operations, such as in the field of investment analysis. Factors such as global economic conditions, technical improvements, and market competitiveness are taken into consideration. Ronald's perspective is just one of many in the financial community. Investors interested in a thorough understanding of Tesla's stock prospects would benefit from considering a range of analyses and opinions, including Ronald's for those viewers who wish to delve into the specifics of Ronald's analysis. Diverse opinions and forecasts are common, reflecting the different methodologies, perspectives, and information sources used by analysts. It might be helpful to pause the video and go through his entire assessment. His analysis probably contains thorough explanations for the cost, insights into Tesla's business procedures regarding target adjustments, market standing, as well as prospective dangers and possibilities that could affect the stock price of the company. In the interim, Adam Jonas of Morgan Stanley has been publishing a lot of notes on Tesla in recent weeks, sharing his observations. The author proposes that Tesla is leading a technological revolution, drawing comparisons to the Cambrian explosion of organism diversity over 500 million years ago. The author focuses on Tesla's achievements in AI and robotics, specifically the Optimus V2 robot. This highlights the impressive development speed of Tesla's Optimus V2 from its initial release to its most recent iteration. The robot's hands and fingers are incredibly sophisticated, yet Elon Musk frequently projects optimistic timescales. The possibilities for using such a robot are endless. Just think of a machine that is capable of handling simple household chores like folding clothing in addition to more complicated ones. The Optimus robot's practical efficacy, however, is what will really change things. If Tesla can show how useful it is in real-world situations, demand from a variety of industries may be enormous. This raises a crucial question. How will this technological improvement affect social structures and employment? In this environment, the discussion concerning universal basic income and the nature of employment in the future becomes more pertinent. Let's also discuss Tesla's entry into Mexico. For Giga Mexico, the business has negotiated a large incentive package worth roughly $153 million. This backing from the Nevada state, less optimistically, Leon includes payroll tax reductions and the creation of necessary infrastructure, such as roads and water treatment plants. However, the precise date of construction's commencement is yet unknown. The federal $7,500 EV tax credit for Model 3 rear-wheel drive and long-range models delivered later this year is ending, according to a statement from Tesla. This results in some interesting pricing. The pricing of the Model 3 and Model I rear-wheel drive and the Model I rear-wheel drive will be extremely similar with the absence of the tax benefit. As we anticipate the Model 3 and Model I refresh in the United States next year, this pricing proximity is also visible between the Model I Long Range and the Model 3 Performance, as well as between the Model A Performance and the Model 3 Long Range. In other news this week, Tesla made news when it recalled 2 million US vehicles due to a problem with the autopilot safeguard. It's crucial to remember that this was fixed by an over-the-air software update rather than a physical recall. Lastly, let's examine Tesla's stock performance. Following a turbulent 2023, Tesla looks to be setting itself up for a successful 2024. For Tesla, 2023 has been a year of highs and lows with notable swings in its stock. Nevertheless, as 2024 approaches, a number of important reasons point to a potentially successful year for the business. There are encouraging signals of growth for Tesla's energy sector, which includes solar panels and energy storage devices like the Powerwall Power Pack and Megapack. This shift towards sustainable energy solutions, particularly in light of global climate change initiatives, positions Tesla favorably in the market. Tesla has several highly anticipated product launches lined up, including the Cybertruck. Global awareness and demand for renewable energy solutions increase, which could lead to higher adoption rates for Tesla's innovative energy products. Production of Tesla's electric pickup truck venture is anticipated to begin soon. The Cybertruck's distinctive appearance and usefulness may allow it to target a sizable market niche, particularly in the US where pickup trucks are widely used. Furthermore, the Tesla and all-electric semi-trucks are about to hit the commercial vehicle market, potentially revolutionizing freight transportation by providing a more economical and sustainable alternative. Tesla's development in AI and driverless vehicles is essential to the company's expansion. The Optimus robot and improvements to the entire self-driving software are among the newest advancements in these fields that are anticipated to be on display at AI Day 2024. The success of these technologies not only enhances Tesla's standing as a leader in the industry, but also opens up new markets and revenue sources. The possibility of interest rates falling in 2024 may have a big impact on increasing car sales. Lower interest rates typically increase consumers' spending power by making credit more accessible. This change in the economy may be especially advantageous to the electric car market, which includes Tesla, since more customers may find that EVs is within their means. Government initiatives that encourage the use of electric vehicles and environmental concerns are driving the global move towards them. As the industry leader in electric vehicles, Tesla stands to gain a great deal from this trend. Additionally, its continuous investment in software updates and battery technology infrastructure keeps it at the forefront of the EV market. With that said, let's take a closer look at Tesla's recent performance in China, where we saw an impressive year-over-year increase in weekly insured numbers. The Model Y saw some fluctuations in demand, but the Model 3 saw steady demand. This performance suggests that Tesla has a strong market presence and that the popularity of electric vehicles in China is growing. Before we go, however, let's pose a few questions to our viewers. How do you interpret Tesla's recent performance in the Chinese market? What are your thoughts on the analyst predictions for Tesla's stock? Share your observations if you found this analysis to be insightful and thought-provoking. Please remember to like and comment below. Additionally, for more in-depth conversations and updates on everything Tesla, subscribe to Tesla Stock News. We appreciate you viewing, and we hope to see you in our upcoming video.